What's up, everybody? Let's say that you have $1,000 to start investing. What are you going to do with that $1,000? Are you going to go buy your favorite company's stock, or are you going to do something different? Well, in this video, we're going to talk about one of the best ways that you can get started with investing, and one of the easiest ways to get started with investing. So, when you have $1,000, you're getting started. There's, not a lot you can do with regular $1,000. Some stocks will trade for over $1,000 just for one share of one company. So getting started, you need to be a little bit more selective with how you go about investing. So for example, if you have $1,000, you may want to go buy your favorite company, like I was just mentioning. Well, if you do that, you're now subject to the ups and downs of just one company, which could be, especially as a beginner, very scary, just because, companies by themselves can go up and down pretty drastically in not too long a time. So as you're getting started investing, one of the most important things is to, build a sustainable habit, a sustainable mindset around investing, where you're investing in a way that is, I guess, a little more tolerable. So that way you don't want to lose all your money in the get-go and then be terrified from investing going forward, just because investing ultimately is how you can have your money make money. And that's where you can get separated from being financially insecure to very financially secure, financially independent, is through things like investing. But again, you don't want to get turned off from investing right from the get-go because you invest in, say, right now the popular stock is like all these Wall Street bet stocks like AMC stock, GameStop. Well, you don't want to be in a situation where all over the news are people losing their life savings betting on things like Dogecoin, AMC stock, and GameStop. And now those people are going to be turned off of investing for God only knows how long, just because they put so much into one stock, lost it all, and now have been burned and won't want to invest again. So what you got to do is you got to make sure you invest in a way that's a little bit more tolerable. And one of the easiest ways to do that is, instead of buying one company, imagine if you can buy multiple, if not hundreds of companies at the same time. So the easiest way to do this, there's two different ways. One is through what is called a mutual fund. One is through what's called an exchange-traded fund. So to kind of go into how these work, so instead of buying just one share of one company with your $1,000, and then all of a sudden you get that you're now a $1,000 owner of, say, Apple stock. Well, with a mutual fund, you can say, hey, here's $1,000 of mine. I want to invest this, but I want to invest in multiple companies. And since you're investing in multiple companies, basically what you do is you give that money to the mutual fund. The mutual fund itself acts sort of like a bucket. So instead of investing in the companies directly, you're investing in the bucket. And then that bucket has a manager on top of it that then goes and buys and sells different companies, and you get a share of that overall bucket, representing hundreds of different companies potentially. So, and then if you sell, you're basically selling your bucket, getting your money back. But in the meantime, though, you're invested in hundreds of companies at the same time. So your exposure is a little lower, just because if within that bucket, say you originally were going to invest in Apple stock, for this example, let's use AMC stock. So let's say you were originally going to invest in AMC stock when it was at, $40 a share, and then it crashes down to $10 a share. Well, if you just have AMC stock, that's going to hurt you a lot. You're going to feel that. But if you have, say, a bucket that has AMC stock as one of 100 companies, and say AMC stock drops, by 75%, but then 99 other companies go up 10%, well, overall, you're still going to have gone up. So it's going to be a lot less painful. Even if all those companies go down, you're going to have some that go down 2%, some that go down 75%, or whatever, and everywhere in between. So your losses are going to be protected a little bit. So that's one way that investing in, say, a bucket makes more sense as you're starting out than investing in individual stocks. Plus, there's a lot more research that goes into individual stocks if you're doing investing right, because you want to see what are the prospects of this future company. Are they financially sound company? How's the management's experience within the company? All these different things are going to be what weigh one stock, one individual company versus another. Or again, if you're just investing in the bucket, you don't necessarily need to do that due diligence. So that's how a mutual fund works. An exchange-traded fund, which have gained in popularity a lot over the past couple of years, works very similar. So it's just a more tax-efficient version and a more passive version. So what an exchange-traded fund often does is says, instead of having a manager, buying and selling within our bucket to try and, outperform or do better, it basically says, you know what, I think the U.S. economy is pretty efficient, and so I just want to, instead of trying to beat the U.S. economy, I want to just buy the same top 500 companies that are in the U.S. So instead of again trying to beat anything, it just says, all right, here's the same first 500 companies or the biggest 500 companies in the U.S. in the same proportions as they actually are in the world. So it buys it in those same proportions. And then whatever happens to those 500 companies, you're just kind of along for the ride. So that's typically how an ETF works. It's also called an index fund, which those are just sort of a more passive way of investing. And it's really popular because of how tax efficient it is. And it's very easy to get in and out of them because they trade like a stock does. So you can basically buy an ETF and milliseconds later, you own it in your account. Same with selling. If you need to get cash really quickly, you can place a trade, and milliseconds later, it's going to be, cash is going to be in your account. Barring some settlement times, but at least you'll see that cash reflected in your account. The other cool thing about ETFs, and I mean you have this with mutual funds as well, but one of the cool things about ETFs is you can really invest in very niche or niche, however you say that word, specific types of investments. So, for example, as you're getting started, you can invest in just the S&P 500, which is the 500 biggest companies I was just mentioning. So that's a really good way, and I'll show you this. So this is the S&P 500. So for example, right now it's about $430. So for this particular version, there's lots of different versions that track the S&P 500. This one just happens to be one of the more popular ones. So you can buy 2 shares of this, and you're almost at your $1,000 right there. So this is one way to invest, but if you're getting more niche, like for example, one of the ETFs that was super popular throughout the pandemic and over the past couple of years are ARK Innovation. So Kathy Woods is now a popular figurehead. She's the basically the founder of ARK Invest, and basically what they do is they essentially pick investments in the ETF structure that focus on innovative technologies. So things like driverless technologies, electric vehicles, fintech. So a lot of the alphabet soup of companies that are posed well for the future. So these have been really popular, especially through the pandemic when everything's going virtual and online. But this is a way that you can invest in something a little bit more niche, but you're still getting exposure to a lot of different companies. So even though it's going to still be a more volatile and aggressive type of investment than say the S&P 500 would be, because these are more just aggressive investments. They're less proven than the 500 biggest companies in the world or in the U.S. So you will go up and down much, but you mitigate your chances of total losses. You mitigate your chances of those huge steep ups and downs as you would investing in one individual company. So this is something cool to get you excited about investing. So right now this ETF's at about 120, so you could easily buy a couple shares of it to start investing with $1,000. Again, this is not a recommendation for these. I'm just showing you these as an example of, because there's niche ETFs for everything. So if you're very passionate about the environment, you can invest in companies that do good or do well by the environment. And another one that I wanted to show as an example, again, this is not a recommendation, but as an example, there's even ETFs that focus on video gaming, which I know is really popular these days. Again, ever since COVID, things like Twitch streaming and stuff has gained massive popularity. So here, this could be a great investment for if that's something you're passionate about and wanting to get started in. But like it'll invest in things like NVIDIA, which does the GPUs for computer gaming, Activision Blizzard, Nintendo, Unisoft, or Unity Software, Roblox, all these different things. So again, these are different types of ETFs that are available. Anything you think of, you can always just Google. Like for example, let's do it right now. Google. We'll do, all right, environmentally friendly ETF. All right, so you have here seven socially responsible ETFs that you could invest in. So if we then just click through here, you have the iShares 400 social ETFs. So this would be like an S&P 500 that focuses on or like the Vanguard ESG stock ETF. So you can click on it and do more research on this specific ETF and see kind of what to invest in. So those are other different ways. So you can also do, like there's all sorts of things out there that you can invest in from the ETF perspective. But all it does is take a little homework on things that you're interested in. And that's a cool avenue to go in terms of getting started with even as little as $1,000 just to get you started. So hopefully you found this video valuable. If you did, make sure you like and subscribe to our channel. We put out a lot of content to sort of educate you around what you can do in finance and how do you basically earn more money, keep more money, and grow more money. But until next time, I'm Josh Bennett. Cheers.